Hi, I'm Brett Swartz, founder of Capital Gains Tax Solutions. So get a backup plan for your failed 1031 exchange using a deferred sales trust. So let's first of all talk about the big challenge when you are in a 1031 exchange, right? You're challenged with what's called the 45-day window to identify, and then you're challenged with the timeline of 180 days to close on some of those properties that you've identified. But if for some reason those timing and those deals don't work out, then the exchange will fail and then you will owe the tax, which is really, really painful. So the intent is to defer the tax. The problem is the timeline, and sometimes the seller not willing to deal or the lender not willing to lend, and sometimes things out of your control where you cannot close the deal. So the solution is having a backup plan. And a backup plan with the deferred sales trust is exactly what we provide for you. At no charge unless you use the trust, and at no detriment to your exchange identification properties. So it's really just a nice insurance policy, if you will, in case your 1031 exchange fails. So let's walk through how this works, okay? So in a traditional 1031 exchange, the funds are with a qualified intermediary. And then from there, if you were to perfect an exchange, it moves to that new entity or that new property, or that entity itself is just transferring to that new property to perfect the 1031 exchange. Of course, equal or greater value within those time periods. But if for some reason it fails, what happens is the exchange company will send you the funds directly to your personal account, which triggers what's called actual receipt of the funds, which triggers the capital gains tax to be due in this given year. So that is, in essence, why you need a tax deferral strategy, and also why you need to maintain non-actual receipt. So what we can do with the deferred sales trust, which is really a nice solution for this, is instead of having that qualified intermediary send the funds to you, you can say, hey, look, send it to my deferred sales trust over here. Therefore, we maintain non-actual receipt of the funds. Therefore, it's in a deferral state, and you can live off the interest and, of course, invest it back into commercial real estate at your own timing. So we want to teach you about how to do all of this and walk you through it. A couple quick things to remember. One, you want to make sure you're working with a qualified intermediary who will allow this option for you to have a backup plan. Not every 1031 company knows about this, and not everyone is quite comfortable with this yet. But we have companies across the U.S. who have worked with us, who've done multiple 1031 exchanges and deferred sales trust. And so you can work with them directly, or just make sure the one you're going to work with, that they approve the deferred sales trust language in the exchange agreement. So I know this is a lot to cover in one video, so please, we encourage you to reach out to us and make sure you connect with us before doing this so that you have both options. The last thing to remember is we don't charge anything unless and if you use the deferred sales trust. So even having as a backup plan, having it available, talking with us, we're not going to charge anything unless you execute and actually use the deferred sales trust. So we encourage you to always have a backup plan, always be proactive about it, and connect with us before you're closing your deal so that you can create and preserve more wealth, and so that you don't feel hostage to a 1031 or overpaying for a property in a highly appreciated marketplace. Hey, reach out to us, capitalgainstaxsolutions.com. Watch one of our free webinars. Also, go into the Deferred Sales Trust Calculator to calculate your deal. We have the resources for you. We look forward to connecting with you soon. Thank you so much for watching this video.